Today, market turmoil deepens after a bunch of surprises. Hello again, it's Martin North from Digital Finance Analytics, one that is posts covering funds and prop news with a distinctively Australian flavour. Well, the US market took a dive on Wednesday as the red wave of expected Republican gains in the midterm elections appeared more like a slight pink. And the news from the crypto sector was bad, as Binance is seeing increasingly unlikely to follow through on its takeover of FTX.com. And of course, we're going to get the upcoming inflation data soon, which will provide clues about the severity of future interest rate hikes. While Republicans were still favoured to win control of the House of Representatives, key races were too close to call, with the better-than-expected showing by Democrats diminishing the prospect of a so-called red wave of Republican gains. What was really more expected in the market was a red wave, said Jay Hatfield, CEO of Infrastructure Capital Management in New York. I think we were in a unique situation where the more the Republicans won, the better off the markets would have been. At least there would have been some stocks strongly rallying, like defensive and energy stocks. With the election outcome still uncertain, investors were turning their attention to October inflation data due out on Thursday, which could shed more light on whether the Fed might soften its aggressive stance on interest rate hikes. CPI is one of the more important inputs in terms of the inflation environment. You'd be hard-pressed to find many investors who want to make a big bet in front of the report, said Art Hogan, Chief Market Strategist at B. Riley Financial. The S&P 500 declined to 2.08% to 3,748. The Nasdaq declined to 2.48% to 10,353, while the Dow Jones Industrial Average declined 1.95% to 32,514. Wednesday's drop on Wall Street ended a three-day rally in which the S&P 500 had gained almost 3%. And the volatility index, the fear index, rose 2.15% to 2609. Major indices added to declines as Treasury yields climbed further after a poor auction of 10-year notes by the US Treasury, but Treasury yields then reversed and fell later in the day. The 10-year was last down at 4.099%, while the 2-year was at 4.5816. Traders are actually split over whether the Fed will raise rates by 50 basis points or 75 basis points in December, according to the CME Group's FedWatch tool. Energy was the biggest drag on the broader market, down 3%, following a larger than expected increase in US weekly crude inventories and positive news on the Ukraine-Russian war after the Kremlin ordered troops to pull out of Kherson. Coterra Energy, Hess Corporation, and Occidental Petroleum Corporation fell more than 8%, with the latter's mixed quarterly results that showed a miss on the bottom line, further souring sentiment. Clean energy shares, which typically benefit under a demographic leadership, rose, with the Invesco Solar ETF up almost 1%. Also hurting sentiment, Walt Disney tumbled 13%. That's the biggest one-day drop since 2001, after the entertainment heavyweight reported more losses from its push into streaming video. And in tech, Meta Platforms bucked the trend to rise more than 5% after the social media company detailed plans to cut more than 11,000 jobs, or 13% of its workforce. The cost-cutting was welcomed by Wall Street amid frustrations about the company's ongoing plan to invest in the metaverse, as the Facebook parent doubled down on its risky Meta investment bid amid a crumbling advertising market and decade-high inflation. The mass layoffs, among the biggest this year and the first in Meta's 18-year history, followed thousands of job cuts at other tech companies, including Twitter, Microsoft, and Snap. Like its peers, Meta aggressively hired during the pandemic to meet a surge in social media usage by stuck-at-home consumers, but business has suffered this year as advertisers and consumers pull the plug on spending in the face of soaring costs and rapidly rising interest rates. Not only has online commerce returned to prior trends, but the macroeconomic downturn, increased competition, and ads signal loss have caused our revenue to be much lower than I expected, Chief Executive Officer Mark Zuckerberg said in a message to employees. I got this wrong, and I take responsibility for that. On a short call on Wednesday, a red-eyed Zuckerberg addressed employees, but took no questions. He stuck to a script that closely followed the wording in the morning's blog post and called the increased investments in e-commerce a big mistake in planning. Meta shares rose on Wednesday as investors cheered caution by a company that has been pinning its future on that metaverse with pricey investments that Zuckerberg himself says will take a decade to bear fruit. The market is breathing a sigh of relief that Meta's management, or Zuckerberg specifically, seems to be heeding some advice, which is you need to take some of the steam out of the growth expenditure bill. Hargreaves Lansdowne analyst Sophie Lundy-Yates said, they're going to have to continue to right-size. Next year is going to be a difficult environment for them, said Paul McCarthy at Kisco Capital, which previously owned Meta shares. McCarthy added he was skeptical about the company's metaverse bets and that rising interest rates and a gloomy macroeconomic environment could continue to weigh on the ad market. Tesla dropped 7.2% to a 2-year low after Chief Executive Elon Musk late on Tuesday disclosed that he sold $3.95 billion worth of shares in the electric vehicle maker's days before he closed the $44 billion deal for Twitter. Investors also fretted about the health of major cryptocurrency exchange FTX after a deal to buy it collapsed, as bigger rival Binance said it was pulling out. At issue is Binance executives finding through due diligence that the gap between liabilities and assets at FTX is likely to be in the billions and possibly more than $6 billion. Binance Chief Executive Officer Changpeng CZ Zhao had stunned the crypto world on Tuesday with an announcement that his firm was moving to take over FTX.com, which suffered a liquidity crunch after Zhao announced that he was selling a $530 million holding of FTX native tokens. Binance signed a non-binding agreement on Tuesday to buy FTX's non-US unit to help cover a liquidity crunch at the rival exchange, but the deal was subject to further due diligence. As a result of corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged US agency investigations, we have decided that we will not pursue the potential acquisition of FTX.com, Binance said in a statement. A representative for FTX did not immediately respond to a request for comment, but Chief Executive Officer Sam Bankman-Fried told employees in a Slack message viewed by Reuters that Binance had not previously expressed reservations about the deal. FTX.com is also facing scrutiny from US regulators over its handling of customer funds as well as its crypto lending activities. The turmoil over FTX has hit crypto prices. Bitcoin, the biggest cryptocurrency by market value, was last down about 15% to 15,700 US. Ether was down 18.8% to 1,084. And total capitalization of the crypto space is now down to $920 billion, having hit a high of more than $3 trillion at its heady best. That brings this week's decline on Bitcoin to around 20%. It reached a record high, of course, around 69,000 just a year ago. Just about every digital coin was struggling as Solana, Polkadot, and Avalanche all dropped. The market is now in full fear mode, said Ilan Solent, co-head of digital assets at Marex Solutions, because Pandora's box has been opened with this Binance FTX deal, and now everyone's looking to see if there's more dominoes and what else needs to be liquidated. The FTX Binance saga leaves Bitcoin around the lowest level since November 2020. Zhao himself admitted that there was no master plan to take over FTX. His about-face leaves the fate of the bilingual exchange and its clients uncertain and sparked renewed concerns about contagion risks across the unregulated crypto industry. Since I entered the crypto industry in 2016, very few periods tested its market infrastructure and participants like the last 24 hours did, said crypto hedge fund manager Dan Lebu of Modular Asset Management. And Noel Asherson, author of the Crypto is Macro Now newsletter, pointed out that Bitcoin, which typically holds up better than other tokens during times of stress, was seeing greater declines than some of the other altcoins. That potentially points to institutional investors bailing as a result of the drama. It's a sign that this is a blow to confidence in the industry as a whole from the investor's point of view, she said in an interview. From the industry's point of view, it's also a pretty steep blow, much more so than what we saw with 3 Hours Capital and the Terra implosion. This is sitting harder. The sense of dread that swept across clients of fallen crypto exchange FTX.com was so intense that they pulled out $430 million worth of Bitcoin in the space of just 4 days. FTX had more than 20,000 Bitcoins going into Sunday, according to data from CryptoQuant. That fell to almost zero by Wednesday after fears about FTX.com's financial health led customers to flee. FTT, the utility token of the FTX exchange, has collapsed by more than 75% in the past 24 hours and was trading at around $4.20, according to CoinGecko data. And the price of Sol, the native token of the Solana blockchain, which is associated with both FTX and Bankman-Fried's crypto trading house Alameda Research, posted dramatic declines alongside other tokens of Solana-based projects. Solana was down as much as 30% on Wednesday, taking losses this year to 90%. SBF and FTX were the biggest patrons of Solana. Teng Yang, a researcher at digital asset research firm Delphi Digital, said on Twitter, "This era is over, and Binance has taken over, and they will heavily favour BNB chains over Solana." Alameda had around $1 billion in locked and unlocked Sol, which they'll have to sell if insolvent. This puts a huge sell pressure on Sol. The FTX Binance ordeal gave some traders flashbacks to the issues suffered by Celsius, the crypto lender that collapsed earlier this year, as well as those seen by other firms that were engulfed in this year's crash in digital assets. Tu Hing, CEO of crypto investment firm Satari Research, said, "The situation is still very fluid," while adding, "I am confident that these two crypto giants will do the right thing to protect investors and the industry." Well, I'm afraid that I think that this is another significant signal for the crypto industry. It's a time when, of course, central bank digital currencies are starting to assert themselves, and when the value of crypto assets has fallen through the floor to the point where many investors are just trying to get out anywhere they can. So standing back, we, of course, see this continued volatility across all markets, and this is going to continue. As I continue to say, unfortunately, don't expect any recovery anytime soon. Next big issue, of course, will be what the US inflation number looks like when it comes out. Will it be above 8%, at 8%, or below 8%? And what about the core inflation? Well, we'll be reporting that when it's available. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.